All right, guys, this is the top 10 things every trader should know. I'll be your presenter today. My name is Andrew Keene. I want to thank everybody for doing what you did and taking advantage. You help me, I help you. I scratch your back, you scratch mine. This could take 25 minutes. It could take an hour. I don't really know. I've never done this presentation before. The way that all of our presentations kind of work is I send all the bullets to James. James makes slides, and then I tell him everything to change, and then he remakes the slides. So this is a top 10 list of everything a trader should know. Past performance is not indicative of future results. So let's start with what the problem is. Oh, what is the problem? The problem is 90% of traders lose money trading. If I just got a show of hands, and obviously I won't share this with anybody, do you guys make or lose money trading? You guys make or lose money trading? Say make or lose. Lose. One person. Lose, 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 both. Both, even, lose, both, both. Lose. There isn't anybody that says they make money yet. 90% of all traders lose money. If anybody ever told you that trading was easy, they are crazy. Trading is not easy. I've been trading for 14 years. I've been profitable 13 of 14 years. About 6 weeks ago, I was down about $150,000. Okay, you can see my profitability is right here. I am now up 70,000. So in the last 66,000. In the last 6 weeks, I made about $220,000. Okay, but if anybody claimed that trading was easy, they're nuts. Trading is challenging. It is hard. 90% of all traders lose money. So, how can we get through these common pitfalls? What are the mistakes that traders make? Let's talk about these. So, this is a list of the top 10 things every trader should know. Number 1. I can't believe I am saying this out loud. Never never add to a losing position. Okay? Never add to a losing position. I am an expert trader. I've been trading for a very long time. If you're at the level where I'm at, which is an expert trader, it's okay to add to losing positions. But most people here are not making money. So that means, number 1, never add to a losing position. Yes, I do it all the time, okay? But 90% of all traders lose. I'm in the 10%. Number 2, have stop losses in place. Easier said than done, right? Have stop losses in place. Always know where you're going to take a trade off, okay? Mine is more feel the market and timing, but always have a stop loss in place. Number 3, trend is your friend. Trend is your friend. I trade counter trends sometimes, but it is very, very hard and challenging to trade counter trend. So stick with the trend, okay? Counter trend is very, very hard. Stick with the trend. Number 4, don't chase trades, okay? Sometimes subscribers of the trading room ask me, hey, where should I take a trade? Where should I put a trade on? Where should I take it off? Where is it okay to chase to the trade, okay? When can I chase to the trade? And I'll give you a strategy when you can't. It is okay to chase trades, but in general, don't chase trades. These are all probably common mistakes you guys are all making in your trading plan, and you're not seeing the probability that you want to see. Okay. Number 5, premium kills. Today I sold a bunch of calls today in CRE. Why would I take off a CRE position? Okay, because premium kills. Those are all the way to February. But every day that goes by, I lose money on this trade. So premium kills. And we're going to go over examples of all this so you guys can understand it a little bit better. Okay? Number 6, tips are for waiters. Tips are for waiters. Number 7, confidence scale. Every trade should have different confidence scale than another one. Okay? Not every trade should have the same dollar amount, same risk. So using a confidence scale, okay, is very, very important. Number 8, R&R. Look at risk versus reward setups. Okay? Like I said, guys, we're going to go through all of these. Risk versus reward setups. Number 9, write down every trade at the end of the day as a journal. As a journal. And number 10, have a community behind you to share ideas and philosophies and strategies. Okay? So those are all 10 of the top 10 tips. We will go through every single one over the course of the next, I don't know if it's going to be 20 minutes to an hour. Okay? Number 1, never add to a losing position. A beginner trader should never add to a losing position. As an expert trader, like myself, I oftentimes will add to a position if it moves against me and I think there's a chance that I can get my money back. Okay? But I usually try to make sure it's at least 2 months out. CRE is a perfect example. I added to CRE Feb 30s. I got in as cheap as 55 cents. I sold a bunch out today for 80. FXE is another example. EWZ is another example. But not in the weekly options, not in the front month options. I would only look to add in February and beyond. So let's look at an example last month here in FXE, and I added to a position. But once again, we see the key important things. This should only be done by who? An expert trader. About 90% of you in here said you either lose money or you break even. So, what do I say to you? Never, ever add to a losing position. This is someone that's been trading professionally for a long time. So we see here in FXZ, I added to a losing position, but, and we're going to learn in another section here, that trend is your friend. In this downward trend here, okay, there is no longs all the way down here, okay? This levels, there's no longs. A trader bought calls here, and I added to my position, okay? And the philosophy and the strategy isn't the fact, did I make money or not? That's not the point. The point is, if you guys are not making money trading, do not add to a losing position. You're just going to dig yourself a bigger hole. And then you say to yourself, hey, I'll get out of this trade when I get back to break even, right? I'll take off this trade when I get back to break even. That is not the right way to trade. The right way to trade is to buy your position, trend is your friend, using unusual option activity, have stop loss, have targets, get out before the premium dies down, but never add to a losing position unless you're an expert trader. Does everybody understand that so far? Or forever hold your peace. Yes. One lesson, don't add to a losing position. Okay. Number 2, have stop losses in place. Okay. This is like a newer thing that we've kind of tried to teach a lot of our traders. Like I said, guys, our Christian was a student of mine. Tara was a student of mine. Okay? These were students of mine that have now become professional traders making money in moderating the trading room. Every single one of my moderators was a former student, okay? I taught them the strategy. I taught them the philosophy. They went through these top 10 rules and they abided them, okay? If you're one of the people that said you do not make money, please stop trying to add to losing positions. Then we talk about stop losses, okay? Stop losses. For a beginner, 20% stop loss. For an intermediate, 50% stop loss. I'm an expert. I do not use stop losses. But these are really, really good bases that you guys can use for stop losses. So, hypothetically speaking, you buy an option for $1. If you buy an option for $1, where is your stop loss? Okay, your stop loss would be at 80 cents. Simple and easy, guys. If you're an intermediate trader, where would your stop loss be? Your stop loss would be at 50%. So you would have a 50-cent stop loss. Simple and easy, okay? Abide by these rules. Move from a student to a moderator. 20% stop loss for a beginner, 50% stop loss for intermediate. So if I buy an option for $1, and if I'm a beginner trader, I will have a stop loss at 20 cents. So my stop loss would be very good at 80 cents. If I'm an intermediate trader and I use a 50% stop loss, if I buy an option for $1, very good. My stop loss will be at 50 cents. And you guys can actually put in orders nowadays where you can put in a stop loss. You can put in a stop loss as you put on the trade, and you can have it GT, I think it's GTC, is it good to canceled, where it'll just stay in automatically. Okay, so always have a stop loss. Number 3, I know so many of you guys try to break this rule, and you shouldn't be breaking this. Number 3, trend is your friend. This is why I personally use the Ichimoku cloud, otherwise known as Ichimoku Kinkin Hoi. Okay, the Ichimoku cloud is the favorite indicator of mine. We have webinars, we have workshops, how to set it up. I'm not going to go through how to set it up today, but no, this is the way you should be trading, guys. If the stock is trading above the Ichimoku cloud, it is only a long. If it is trading in the Ichimoku cloud, there is no trade to take. And if it's trading under the cloud, there's only short setups. I know a lot of you guys trade, and you try to always pick the bottom. Okay? Everybody wants to be the guy that said they shorted Amazon at $680 and it went straight down. It's just more fun. It's cooler to say that, right? Or everybody wants to say they bought LNG at 37, okay? Whatever the case may be. However, that's not a proper way to trade. Use Ichimoku as a general principle guide. Buy above the cloud, okay? If you're day trading, same rules apply for a 5-minute bar. If you're swing trading, same rules apply for the daily chart. Only buy above the Ichimoku cloud. Don't do anything in the cloud, and only look to short under the Ichimoku cloud. Number 3, trend is your friend. How to use different time frames? Depends what product you trade. If I'm day trading, I only day trade Apple, BABA, GoPro, Facebook, Tesla, Twitter. I use the 5-minute bar. If I'm swing trading for stocks, I will use the daily chart. Forex, 4-hour bar. If I'm trading futures as a swing trade, I'll use the daily chart. If I'm day trading futures, I'll use the 12-minute bar. Okay? So this is very, very important. Use that trend as your friend. This is tip number 3 in trading. So here's a chart of Google, okay? There is none, I repeat, none short setups whatsoever. There is no short setups whatsoever. There's only long setups on the daily, okay? Using the Ichimoku Cloud, there's more than one setup. We're not going to go over all the setups for the Ichimoku Cloud. That is at a later date. But this setup right here, as we look at Google, is only a long. Don't try to be tricky or cute. Try to find a double top in Google or try to find a reversal bar. It's only a long right here in Google. Simple and easy. And you can bring up the Ichimoku Cloud on any chart and see if it's a long, flat, or short setup. Here is VXX. Okay, and this was a couple days ago. Yeah, the VXX sold off, but it was in the Ichimoku Cloud. I would rather be buying the breakout to the upside or selling the breakout to the downside. But in the Ichimoku Cloud, there is nothing to do, guys. There is no trade setups whatsoever. Does everybody understand this so far? Good. Next one. Wow. How is this stock? This is known as US Steel. This is one of the worst charts I've ever seen. It's trading about 820 right here. Okay. So X, US Steel. As the stock sells off, if you're not making money, you're not an expert trader, there's no long setups here. We saw some January 10 calls being bought. I say to myself, no, no, no. There's no setups whatsoever to long side. I cannot get long US Steel till it breaks above the cloud. And after such a huge downtrend, the first breakout above the cloud probably won't work. Whatever. That's at a later date. But here, there is no long setups in US Steel if we are under the cloud for this long of a period of time. These are only short setups. We can aggressively short, we can moderate pullback short, but there's only short setups here. If you took the sell on the red line and put your stop in the cloud, you would have had 1, 2, 3, 4, 5, 6, 7, 8 winners. Okay, so if you shorted the red line and put your stop in the Ichimoku Cloud, you would have 1, 2, 3, 4, 5, 6, 7, 8. If you look for a possible double bottom every time, possible here, loser. Possible here, loser. Possible here, loser. Possible here, loser. If you just keep looking, you're never going to find a winning trade. Okay? So stick with trend is your friend, guys. The trend is your friend. Trend is your friend. Number 4. No, I noticed a lot of names in here. I noticed a lot of you guys are subscribers of our Platinum package and the live trading room. Okay. Chasing trades. Okay. Chasing trades. I personally say 10% stop loss. 10% more than the trader pays. So every day throughout the trading day, I watch unusual option activity. I watch institutional order flow go through the market, and I allocate my capital on certain trades. How much should I pay for an option? I personally say I would never pay more than 10% more than that institution pays. So if the institution pays 80 cents, I could pay up to 88. But chasing trades, and I know I got dinged a little bit in ZIOP because I chased up too much. 5% in general, maximum 10% of paying more than the institution paid. Okay? So it is important to trade as close as the institutional price. If I chase too many trades, my risk can get out of hand and I can expose more than that. As a general rule, I will not pay more than 10% over what the institutional order pays. Hypothetically speaking, a trader pays 80 cents for some calls. I would only pay potentially up to 88 cents, which is 10%. Okay? I wouldn't want to pay 90, 92. I usually use a 5% rule, so I'd maybe pay up to 84, maybe 86, maybe 85. But chasing trades, I know a lot of subscribers of mine, you know, the trade goes off at 125, they panic, they want to get in the trade, they pay 135 or 145. If you use the 5% rule, okay, if you really love the trade, 10%, but if not, 5%. If you're paying, an option goes off at 125, you pay 135, I think that's too much. And also, paying up is better on cheaper options. So if you pay from 50 to 55, that's a much better deal than paying from 125 to 135. Okay? So chasing trades is one of those things that hurts a lot of traders. So 5% rule, max 10% rule. But in general, 5% rule here, guys. Don't be chasing trades. And we do this webinar for you guys to really help you out with your trading. We think all these tips you guys can learn from. As you guys can see, I was in the trading room for 2 hours today, and this is my second webinar tonight, so my voice is a little shot. But chasing trades is very, very important when you're trading unusual option activity. Cree, I don't know about that one. They keep buying calls. Okay. So here's an example. Let's say, hypothetically speaking, trader buys 10,000 XYZ. We just give it a nice generic name. 100 calls. If you're newer to trading and you're really not doing well, I would say 5% rule. I wouldn't even say 10%. I'd say 5%. The stock has immediately bid and the calls have moved up to 120. Okay? I don't want to be paying 120. I know if I'm trading them, my target's already 120. I know my target's going to be 110 and 120. We could almost tweak it here and say if an option is over $1, no more than 5%. If an option is under $1, maybe 10%. Okay? Because it's already moved to my target. Someone wants to email me, they're like, AK, I bought your exit. I'm like, well, I'm not a registered investment advisor. I can't tell you what to do. But chasing trades, guys. Don't be chasing these up very much, okay? I would say 5% if a stock's under $1, at most 10% if it's above $1. I mean, sorry, the other way around. 10% if it's under $1, 5% if it's above, okay? Also, wide markets. I would rather chase a trade if the market is 50, 54, okay, than if the market is $1 to $1.30, okay, $1 to $1.30. So, just remember that, okay? I like trading what I call is penny wide markets. Markets that aren't very tight at all, okay? Markets that are really wide, it's really, really hard. I actually don't take some trades because the market's very wide. We saw a Hershey's trade the other day. They were May 105s. And the market was literally like 40 cents wide, okay? For every buyer in the option market, there has to be a seller in the option market, right? So, if I buy something, I have to be able to sell it to someone, right? So keep an eye on how wide a market is, guys. Keep an eye on how wide a market is. My ideal would be if it's 62 cents at 63 cents, 5,000 up. That's my best, right? 62 bid at 63, 5,000 up. That would be my best case scenario. But it doesn't always happen like that. So keep an eye on how wide the market is. And don't chase trades if the market's really, really wide. Because if you buy them, you're eventually going to have to sell them to someone else, right? So chasing trades is number 4. Okay, number 5. This is one of my favorite lessons, guys. Premium kills. Okay, if I buy calls, I'm long delta, I'm long gamma. We all know if I'm long gamma, I am short theta. If I'm short theta, every single day that goes by where the option doesn't move, I lose money on that trade. Okay, so as you guys have noticed, Part of the reason I've been making so much money lately is I've been taking off the positions a lot earlier, okay? Anything in December or January, for the last 2 weeks, I have not held overnight, besides LNG, okay? Besides LNG, I've not held anything overnight. So I look to expire these at least 2 weeks before. And also, I look early in the morning on Thursday, and I look early in the morning on Monday to sell a bunch of my positions because I know time is of an essence and I want to get out of these positions, okay? So time decay, guys, is very, very important. We call something DTE, days until expiration, okay? For now, I'm in December. If I trade any January or December, they'll be day trades only. I made $1,000 in Sony. Wow, I'll take $1,000 a day. If I make $1,000 a day, it's $250,000 on one trade, okay? So not holding positions overnight is so important. Look at Sony, guys. And let's go to my P&L. Sony, I bought some Jan 25s. Boom, I sold them out. $1,000. This is cash in my pocket. This is as good as anything gets in trading, guys. When you don't have a position on and you make money. That happened to me today in Sony. I bought them for 90. I said, boom, let's get out of these 95 cents. Okay? So time is working against you. You know, you can think of it as an insurance policy. Every single day that goes on where, you know, you don't get an accident, you're paying money for that. So premium kills. Here's an example. 100. Let's say I buy 100 XYZ. January, 100 calls for $1. If I've not hit a profit target, most likely I will get rid of this Friday mornings. Thursday mornings, sometimes Friday mornings, also Monday mornings. Okay? Okay? I avoid time decay as much as possible. Do not hold positions overnight. Time decay. Okay? So this is an example of UTX. Weekly 94.5 calls. We saw an institutional order of buying these. I could probably pull these up really quickly here. UTX in the last 10 days. So we saw a buyer of the 94.5 calls. I got into these. Let's see where these were. Okay. And that day, I made $4,500 profit. They eventually sold these out for 10 cents. Okay. So this trader either shorted stock or just lost a bunch of money. If I held this position overnight, I would have lost a lot of money. But I bought these calls, and I had 400 of them, and I locked in $4,500. They ended up going to zero. So that was a good sale, right? Not every sale is going to be a good sale, but that was a really good sale here, and I made money on this trade. So I've been trading the weekly options and the January options a lot tighter, trying to get out of them, lock in profits as quickly as possible. April, I can hold those a little bit longer, but locking in these profits. So weekly options have the most time decay because time accelerates into expiration. Highest gamma, highest theta. Highest risk, highest reward. Simple and easy. Go to the next slide. Okay. So what has more risk? $2,000 in weekly options or $10,000 in January options. And from my point of view, I think $2,000 in weekly options has more risk. Okay? Because what happens here, if you look at it, I could lose all this money by the end of the week, right? So I could lose, let me go to my pen. I could lose 2K by the end of the week. If the option market doesn't move at all, maybe on this trade I'll lose like $200, okay? So the weekly options, guys, have so much more at risk, okay? The weekly options have so much more at risk. There's more potential reward, but they have so much potential risk. That's why I trade these a little bit busier, okay? So understand weekly options. Number 6. Bum, ba-da-dum, ba-dum, bum, 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 ba-da-dum, bum, 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 bum. Hate to break it to most of you people that love CNBC and Bloomberg as much as I love CNBC and Bloomberg, but most people that are in Bloomberg and CNBC are not traders. They do not trade for a living. They actually don't have any skin in the game. A lot of them are analysts. What's his name? Mike Santori. Mike Santori's on. He's a journalist. He doesn't trade. They asked him his opinion about the price of Twitter. What does he know about any of that? He doesn't. It doesn't matter if he makes or lose money. Kramer says the same thing. Tips are for waiters. Webb started his trading career, started listening to CNBC, and he lost $100,000 really quickly. Why? Because he would go on TV, he would listen to some guy saying, hey, it's time to get long oil. Hey, it's time to get short oil. None of that matters, okay? Do you think the big hedge fund guys come on TV? I mean, they do it from time to time, but, Carl Icahn, Bill Ackman, no. They're too busy researching stocks and making money. The more someone is on TV, the more they probably don't make money trading. If you're a really good trader and you're making money trading, why would you be on TV? There's a lot more money potential to be made trading than being on TV. I try to not be on TV as much as possible because I could spend that half an hour because I know a couple times I missed a $4,000 trade when I was on TV. And I was like, that sucks. I literally could have made $4,000, but I was on TV and I'm not getting paid for it. Okay? So to understand that tips are for waiters. Things we pay close attention to is unusual option activity, technical indicators, inflows and outflows, and earnings. Here's a perfect example. This guy, who knows who he is, Paul Sankey, I've actually heard of him. He's a Wolf Research. EOG, price target, $94. He says oil is in. The oil bottom is in. Let's go to EOG. Oh, look, it's down again today. It's trading $76. So if you're an amateur trader and you're saying to yourself, wow, this guy seems pretty smart. I'm going to go buy EOG stock. This price target's 94. I think it's going to go to 94. Well, today it was down about 2%. Let's go to EOG. So today it was down 2%. Okay, and I don't know what the date of this interview, but it's probably right around here when it's trading 84. Is this guy going to lose his job? Absolutely not. He doesn't have any skin in the game. He doesn't have any skin in the game. Okay? So don't turn on the TV and go rush or something just because your favorite analyst or someone on TV says certain stocks or buy or certain stocks or a sell. Okay? Tips are for waiters. Okay? Confidence scale. Okay? Confidence scale. It is important to keep your risk and positions in line. This is a confidence scale that I use, guys. You can snapshot it. You can take a picture of this. You can just use your own confidence scale, whatever you think works best for you. This is something I created for my traders. Confidence number 5 is 0.5 to 1.5% of my total book. So it doesn't really matter what, if you're trading on $100,000 or trading $10,000, okay? Just realize that some trades are better than other trades, okay? If you're trading earnings trades, probably want to make those a little bit smaller. If you're trading some unusual option activity that's 3 months out, then risk a little bit of money. LNG, March 55s, unbelievable trade, made tons of money. AIG, May 65s, made tons of money, okay? So the ones I have more confidence in are the ones that are longer dated, okay? The ones that are longer dated and also have huge unusual option activity, okay? So CRE was one of the huge ones, and now that it gets closer till expiration, I'm trying to get out of these a little bit more. So huge volume, data, and unusual option activity. I'm usually going to risk more money. I'll trade earnings. I'll trade SPY iron condors, but in those in general, I try to use less confidence. So you can snapshot this. This is a good plan, or you can look at everything as a dollar amount of your total book. You can look at everything as a dollar amount of your total book. Say, hey, on this trade, I want to risk $300. The difference between good traders and great traders, good traders think about how much money they can potentially make. I consider myself a great trader. I say, hey, if I am wrong, how much money can I lose? Okay. If I am wrong, how much money can I potentially lose? And that is the difference between a good trader and a great trader. So always use a confidence scale in your trading. How are we doing so far, guys? Are you learning? Are you learning the top 10 trips of trading? Joe Crow says, yeah, yeah, yeah. Okay. Number 8. Bum, ba-dum, ba-dum, bum, bum. Number 8 is risk versus reward setups. Okay. Some people like rest and relaxation. I don't really rest and relax very often. I like risk versus reward setups. How much I'm willing to risk on a trade versus how much I can potentially make on a trade. Someone came to me and said, hey, Kay, I have a $10 million. I want 95% of my trades to be winners. Simple. That's easy for me. I would sell a $1 call spread for 1 penny because I know I'm going to make money 95% of the time. I'm not guaranteed profitability, but I know I'm going to make money 95% of the time. That is a probability and math. So R&R, risk versus reward setups. How much you're willing to risk on a trade versus how much you can potentially make on a trade. There was a trader in our pit. His name was Paul. Okay, it's actually a true story. They would come in here to sell us an option. Let's say they sold us an option for $5. The first thing Paul would do would be try to sell that option for $5.10. And we looked at him like, Paul, what are you doing? We're all going to sell stock to hedge ourselves delta neutral. Paul's trying to make 10 cents on that option. And I'm like, what are you doing? Why would you do that? You're risking $5 to make 10 cents. Fast forward 9 months. Paul was not trading in our trading pit anymore. Reason why? He didn't understand the concept and the schematics behind a risk versus reward setup. So always look at how much you're willing to risk on a trade versus what you want your potential reward and make sure that it line up accordingly. Okay? Number 9. And this one might be a difficult, challenging one for you guys. And writing down every single trade. Okay? Writing down every single trade. I worked for Boda Capital Management. They never, ever once made us do this. Okay? They never, ever once made us do this. But there was a trading firm where a lot of trades were very successful, and they had to do this at the end of the day. At the end of every single day, they had to write down every single trade. Was it a good trade? Was it a bad trade? Would they put it on again? Why they had not? Is it still on or did they take it off? Kind of like a journal. And you guys can have a journal too. I have never done this before, okay? But this is a great idea, okay? So at the end of the day, go through your session. You can record your own trading if you want and write down a journal and a spreadsheet. What is working? Is day trading working? Is earnings working? Is unusual option activity working? Okay, it's very, very rare that all 4 components are going to work. Day trading, earnings, unusual option activity. I know lately I made a lot of money trading unusual option activity, but getting in and out of positions very, very quickly. Not holding positions so long. So what is working? You know, maybe day trading Apple, Baba, Facebook, GoPro, Tesla, Twitter is working. Maybe it's not. Maybe unusual option activity is working. Maybe it's not. So keep an eye what is working for you guys and stick to what it is. Okay? There's no reason to be trading earnings if earnings doesn't work for you. We have some guys that love trading earnings, so they take every earnings trade. We have some people that don't like trading earnings, okay? Stick to your strengths, you know? If you're risking $200 a trade and you keep making money in earnings, increase it. Okay, if you're trading unusual option activity, you're risking $500 per trade. You make money on it, increase it. Okay, but write down that journal. You can do like a checkbox of what is making you money: unusual option activity, earnings, or potentially day trading. That is number 9. Number 10, and this is one I always preach, guys. It's to have a community around you. Okay, there's a lot of things that I'm proud of since I launched my business. One of them is that 4 of my other moderators were former students of mine. Another one is I've taught 50,000 students to trade. But my most important one is we have an active community. A lot of times when you guys call on the phone, I go, hey, tell them I say hi, because I really care about my students. I'm looking through the room right now. Cedric, I know, has been around for a while. Donald Leverich, know that name. Haran Patel, James Katz, Jim Orkney, John Dura, Julie, obviously, Kurt Carlson, Laura Connolly, Phil Hahn, Rodney Trotter, I know you. Robert Craddock, I know you. Stephen Craig. That's just to name a few. Wayne Moore, of course. Valerie. So basically, I mean, I almost know almost all of our subscribers, and I've built a community. I encourage all of our traders to share ideas. I host meetups in different cities so the traders that live in those cities can meet each other. Okay, I'm trying to build a community of all of you guys. We used to be KeeneOnTheMarket.com. We are no longer KeeneOnTheMarket.com. We are AlphaShark.com because we are a community of traders. You know, I encourage everybody, you know, if it's not with Alpha Shark, to go find traders that you can bounce ideas off of and have similar characteristics. Okay, and we try to provide that community every single day. Our team consists of myself. I'm in San Diego. I'm drinking a nice glass of red wine while I give this presentation. I've been talking for 5 hours today. I think I'm going to kick it and watch a movie here in a minute. James Romelli. I got James straight out of college. He was actually started as an intern. He trades equities and equity options. So this is my team. This is who I bounce ideas off of. You could have 2 people in your team. You could have 50 people in your team. You could have 500 people in your team. But get a team where you guys can share ideas and bounce them off each other. James is on CNBC, Bloomberg, Fox Business, and in Canada. Webb. Webb was a former student of mine as well. He found out the hard way of not taking tips from waiters. He lost $100,000, and now he moderates a trading room. He's in technical analysis, options, and futures, and he's come up with 3 different indicators. Christian from Hertz, another student of mine, traded for Merrill Lynch in New York. And a really good trader. He specializes in ETFs. He has a newsletter that we come out with that does really well. It's about up 50% ROI. Tara, my VIX girl. I talked about a VIX trade buying Jan19s. I asked Tara what she thought of the VXX Jan19s. She's like, yeah, I approve. I think that's a good trade. So I went on and put some VXX puts on. And this is like who, you know, I get advice for. You know, when I want to know about ETFs, I talk to Christian. When I want to know about technical analysis, I talk to Webb. When I look at earnings trades, I talk to James. Okay, James is my earnings guy. So this is who I look for advice. Okay, so get a community of traders. It could be members of Alpha Shark that you like. It could be people in your community. It could be people, you know, in other countries. But get a community of traders that you trust and respect, because, you know, 2 heads are always better than 1. There's multiple people. It's always going to have a better thing. Oh, and I actually want to switch this out real quick if you guys don't mind. I have to switch this out. So that concludes our 10 top trading tips. Okay. I just want to offer one thing to you guys. If you are interested, we have about, I think, 8 more spots left. Okay. And what we have on Friday, we got a couple questions here. Thank you. You learned a lot tonight. Great. In point 8, you mentioned risk versus reward setups and different strategies. Can you share those? If you told me specifically what you trade, I would help you. When I'm day trading stock, I like to get at least 1-to-1. When I'm trading butterflies or iron butterflies, I like to get 3-to-1. When I'm trading unusual option activity, if I had proper stop losses, I try to get even money. Condors, I would say at least 35 to 40% on iron condors. Okay, what we still have going on, guys, we've been offering this a lot. I think that you guys should take advantage of this. This is my most confident trade of the year. It goes down on Friday. It only happens once a year. I took this trade last year, and I made $4,000. This year, I'm putting on a trade, and I'm expecting to make $1,500 profit for every $5,000 of risk. So I'm expecting to make $1,500 profits for every $5,000 at risk. This is a workshop and a course we are offering on Friday. We only have 7 spots available, and the price is going up to $4.99, I think, tomorrow. So if you are interested in that, okay, you can sign up at alphashark.com/most confident. Okay, alphashark.com/most confident. Okay. This is my most confident trade, okay? So you guys have learned 10 ways to improve your trading as a beginner trader. Take your trading to the next level and take this course. It is on Friday. It is $299. Every $5,000 I risk, I think I can make $1,500, okay? So I'm expecting to make 30% profit in 2 months. This is taking advantage of the tax loss selling. Number 1, we have 7 spots available for this. We will sell out at $299. Number 2, this is my best trade of the year. So you guys all came in here to know how to trade better. I gave you 10 great tips how you can trade better. Now take advantage of my most confident trade. This is the best trade that I come out with. It only happens once a year, and it happens on Friday. And number 4, thank you guys so much for taking time out of your night to hopefully become better traders. My goal is to help educate you and train you. Anytime that you go to a webinar with me, think number 1, I'm going to bring a lot of energy, and number 2, that AK guy's a pretty good guy. He really cares about us. So make sure you guys take advantage of this. If you are interested in this, yeah, we'll send out the email about it. Donald, don't you worry. You'll get it. So does anybody have any questions at all? This is the best course we offer of the year. And I'm expecting to make $1,500 on every $5,000 I risk. Anybody have any questions? Or forever hold your peace. All right, guys, everybody have a great night. Sorry, my voice is a little shot. I talked for 5 hours today. Take advantage of this. This is my best trade of the year. alphashark.com/most confident. I'm trying to make $1,500 of profit on every $5,000 I risk. Thanks, guys, and everybody have a